The topic for today is first-time homebuyer mortgages. If you're in the market for your first home, there are so many questions that you must have. There's so many mortgage programs. People are throwing things at you right and left. What kind of rates? What kind of credit do you need? And I know that you have a lot of questions, so we're going to be diving deep into that today. Hey, ladies and gentlemen, if this is your first time watching one of our videos, I'd like to welcome you to the community. And if you're looking for a thorough, deep dive into all things Philadelphia and suburbs, you've come to the right place. This is the channel that can do it for you. So go ahead and subscribe below and tap on the bell for notifications so that you can stay up to date on the current market in Philadelphia. My name is Linda Dale. I'm a local real estate broker here, born and raised in the area. And I get calls and emails every day from people just like you that are interested in moving into the area. And I love that. So go ahead and subscribe below and tap on the bell. Shoot me an email, send me a text, however you want to reach out to me, and I will help you make a smooth move into the area. So today I have on board my favorite, most knowledgeable mortgage expert, Krista Lowry. She's been doing this, the mortgage business for many, many years. She's a senior vice president at Huntington Valley Bank, a local bank here, which we love our local banks, by the way. We love the personalized service that we get. So Krista is going to talk all about first-time home buyers, programs, and everything you'd ever want to know. And stay tuned to the very end because she's got some really super powerful information you're going to want to be here for. So Krista, there we go.
Hi, Linda. Thank you so much for having me. As you mentioned, my name is Krista Lowry. I work for Huntington Valley Bank, which is a local bank in our area. And we are actually the #1 bank in Pennsylvania at the moment. Our bank has been around for 150 years. So I could start the slideshow presentation now, if that works for you.
Sure, go ahead.
Okay, can you see it?
Yes, all good.
Okay, great. So again, I am a branch manager, senior loan officer for Huntington Valley Bank. My license number is 460312. And below that is my email address. If you have any questions, you can feel free to reach out to me anytime. Our bank is a member FDIC, and we are an equal housing lender. Okay, so I'm excited you're here today. I want to help you achieve home ownership. And I like to explain what an order taker is and if you just want to be a number. So sometimes when you call, I'm not going to say any particular mortgage company, but sometimes when you call a mortgage company, you ask them that you want to be qualified to purchase a house. They ask your name, they ask you a couple questions, they click a few keys on their keyboard, and they say you're either qualified or you're not qualified. That's an order taker. That's not somebody that's actually going through all of your financial information, all of your credit to see what it's going to take for you to purchase a house. So you don't want to be just a number. You want to work smarter and not harder. And what I mean by that is sometimes people like to go on the internet to get their information. And as we all know, the information on the internet is not always correct. So you need to really have an expert who knows all the guidelines and can direct you to all the best programs and everything that you can get for your situation. Okay, so a very important question that I ask all buyers is, what is stopping you from moving into the home that you want? Sometimes it's credit. Sometimes it's you haven't been at your job long enough. Currently, one of the popular situations is that a lot of people were laid off in 2020 due to the pandemic, and they're just getting back to work. So sometimes the income is lower this year. Sometimes there was unemployment last year, but you're back to work now. So those are very important things. I like to know what your problem is, and then I can find the solutions. So sometimes people might say, my credit is stopping me. I have some collection accounts. Do I pay them? Do I not pay them? What is it that you're trying to accomplish? And then I can help you achieve your goal. So the things that I ask you are the things that you're going to ask yourself, which is, where do you want to live? How much money do you have for all the costs to buy a home, which means how much do you have saved currently? And what's the absolute most that you want to pay for a mortgage each month? And, if you're paying rent currently, you understand that if you pay $1,000 a month for rent, you still might have to pay utilities. You might have to pay trash. You might have to pay the water bill, that kind of thing. So in a mortgage, it's kind of different because there's a lot of things that go into the mortgage payment. There's principal, there's interest, there's taxes, insurance, and sometimes private mortgage insurance that all gets added into the total payment. So when I ask you how much do you want to pay, I am going to figure that out so that your total payment is where you want it to be. Where do you want to live? The reason I ask for that is because in different areas, taxes are different. Real estate taxes vary from area to area. For example, in Philadelphia, the taxes are much lower than they would be in Bucks or Montgomery County. So if you want to be in one of the surrounding counties to Philadelphia, then I have to factor in that you're going to pay more for taxes, and it's going to eat into the price of the home that you could qualify for. So these are things that you want to think about before you would talk to me, because I would ask you these questions. So, the first thing we do, or one of the first things we do after I answer some preliminary questions that you might have, is what's your credit score? We check your credit. What does credit affect? If someone asks you, what does credit affect? Who checks your credit? Credit actually affects everything. When you get a job, they check your credit. When you open a bank account, they check your credit. When you get car insurance, they check your credit. And most certainly when you get a mortgage, we check your credit. We're checking your credit to see how you pay your bills and to see what your FICO score is. Now, a lot of different people, companies out there, they have the ability to find their own credit score, whether it's looking at your credit card statement or looking at freecreditreport.com. There's a lot of ways that people can find their credit score. And those credit scores that you're finding are actually not accurate for mortgage purposes. So we do need to run a credit report in order to see if we're qualified. We look at 7 of the 100 FICOs that there are. So FICO scores come in over 100 different varieties, and mortgage companies only use 7 of those varieties. So it's the most stringent of the FICO. If you see, for example, a 660 on your credit card statement for your credit score, I am most likely going to see something like 630 or 635, just because of mortgages are a little bit tighter. Almost half the people in the United States have credit scores of 700 or less. So, having a score less than 700 does not prohibit you from buying a house. There's just, different programs for different scores, and that's why we need to check. So there's rules for everything. Credit is no different. The better your credit score is, the better loan you can get. But if you have a lower credit score, it does not throw you out of buying a house. We certainly have helped, thousands of people that have credit scores that are, 620 to 650. So if you don't know what your credit score is, that's okay. We can check it for you. So common questions that people always ask. This slideshow that I'm presenting to you is actually an approved first-time homebuyer course that I give to people when they are looking to buy a house in one of the first-time homebuyer programs where they're going to get some down payment assistance money. So usually there's an audience in front of me and I ask these questions, but how many pieces of credit do you need to get the best score? The answer is 3. You should really ideally have 3 pieces of credit. A loan, an installment loan would be one of the items, and then 2 credit cards, and they would be considered revolving credit. Revolving credit means that it's up to you to decide how much you spend and how you handle that card. So if you have a limit of $1,000 and you're somebody that spends $1,000 the very first month, and now you have utilized 100% of your credit card limit, that is going to lower your score significantly. The best way to handle revolving credit would be to get your credit limit of $1,000 and don't spend more than $200, $250 on that card on any given month. That is how you handle credit cards. And that's going to give you the best score. And it's ideal to have 2 credit cards. They don't have to be huge balances. They can be secured credit cards. So if your credit is low and you're trying to get your score up, you may not be approved for, say, a Capital One card or a Discover card. That's okay. You can just take $300 into the bank that you bank with currently and ask them to open you a secured card, secured Visa or MasterCard, and that will show on your credit report, and that will help you build your credit. What happens when you apply for something or pay one thing late? So anything you do to touch your credit report at all, and that's paying a bill late, opening a new account, co-signing for somebody, all of these things can negatively affect your credit score. The worst thing you can do is paying something late. And paying something late means past the due date. Past the due date, 30 days past the due date, 60 days past the due date, 90 days past the due date. The longer you go past the due date, the worse off your credit score will be. So the most important thing you can do is just pay your bills on time. Even if you are someone that has maxed out your credit cards, you still could have a good score as long as you pay your bills on time. You would have a higher score if you didn't max out the credit cards. So keeping credit cards below 20% and paying bills on time is the most important thing you can do. If you have old collection accounts and judgments, can you just pay them off to get your score up? Not necessarily. It's always a good idea to talk to me first and have me check the credit report before you just go pay off old accounts. The reason for that is that a collection account means that you didn't pay the bill. They're actively looking for you to collect money. They might be reporting every single month. At some point, that collection account turns into a charge-off. And a charge-off is where the creditor has written off the debt as bad debt on their business tax return. At that point, it stops reporting on your credit report. And if you went to pay it off now, it would actually do more damage than good to your existing score. So collections and charge-offs, you don't want to pay off until you talk to the lender. Judgments.
Krista?
Yes.
How can that hurt your credit if you pay something off? I mean, if I understand a charge-off would be bad, but why would that hurt? Because I have some clients actually that recently told me they were paying off old debts that were on their credit report because they wanted to buy a house. So that's not what they should be doing.
Not necessarily. Yeah, not necessarily. Let's say that you have a Capital One credit card that you didn't pay 5 years ago and they charged off the account. That means that Capital One wrote it off as a loss on their tax return 4 years ago. So that has moved to the bottom of the credit report and it's not actively being reported. So it's not really reflecting in your score. When you pay that account off, now it becomes active and they see that there was a old collection account that was brought current. So it's kind of like, it's hard to explain, but the older things they move to the bottom of the report and they carry less weight.
Right, okay.
They carry more weight. So if you have a PICO bill that wasn't paid from 6 months ago and they still report, which I can see if they're reporting every single month. If they're reporting every month and you pay that off, that will help you. It might hurt you the very 30 days after, the 30 days
right.
after, but then after that, it will start to increase your score. So that's why some collections, we don't make you pay off. Charge-offs, you don't have to pay off at all because they're already written off by the creditor.
But isn't that still hurting your score?
Not necessarily. It depends on how old it is. And then after 10 years, so if something stops reporting and the years go by, after the 10th year, it's going to come off altogether.
Oh, okay.
It just depends on the status. And you may not necessarily know what status it's in by looking at a personal credit report.
Mm-hmm.
And by our reports that we get will tell me how it's reporting, how old it is. And
okay. Okay, great. Thanks.
So, and then will debt come off in 7 years? It's actually 10 years that the debt comes off. It's a misconception that people think it's going to come off in 7, but it's only 10 years from when it stops reporting. So if these companies are looking for you and they're reselling the debt over and over, which there are collection agencies that buy debt multiple times, it could keep popping up. So do you have to have a credit card to get the best score? Yes, absolutely. Absolutely. And ideally more than one. Okay, so, these are just did you know questions. If you want to qualify for a standard mortgage, what is the most widely accepted minimum score? Linda, do you know?
760.
So no, but
Oh, okay.
760 is actually the best score. 760 is
Oh,
the highest that we use. So yes, it would be great to have 760. However, for a standard mortgage with normal interest rates, 620 is the
wow.
score. Yeah. So we range 620 to 760. Now there are some people that have higher than 760, but it doesn't help anything to have higher than a 760. That's just our range. So you can buy a house with a 620 score. If you have a 600 score, there's probably a few things we can do to fix up the credit in a month or two so that you could get to a 620 score. All right, so how much of your income should you use to pay a mortgage payment? It's kind of like the same as rent. If you go rent an apartment, they're going to look to see that 30% of your income is about what the rent payment is. If it's more than 30% of your income, they're probably going to have a problem renting to you. That's like apartment complexes. That's how they look at it. We will go a little bit higher than 30%, depending on what kind of debt you have. If you're somebody that, has co-signed for a bunch of people, you have 4 auto loans and 16 credit cards, we probably won't go that high. But if you're a very minimal debt user, and in this day and age, a lot of the younger people are not actually even using credit cards. They use debit, they use Cash App, they use PayPal, they use Venmo, things like that to pay bills. So not, a lot of people don't carry a lot of credit cards. I still say you need just two little credit cards that you use, maybe one for gas and one for, groceries, not to go buying extravagant things, but you just need some sort of credit because a mortgage bill is a payment every single month. You can't Venmo it. You can't Cash App it. You can't PayPal or whatever. You can't pay it that way. You have to actually pay it either with a check or an automatic debit from your bank account. So banks want to make sure that you do know how to use credit. And when you have a bill due, it has to be paid within a time period. The thing about using debit cards is that if you want something and you want this pair of sneakers and you show up at the store and you hand your debit card, it's paid for and you get your sneakers and you go. It's not the same when you get a house or you have a credit card. You spend the money and then you have to show the diligence to pay that money back within 30 days or pay a part of it back within 30 days. With a mortgage, you got to pay the whole payment, every 30 days.
Mm-hmm.
So anyway, why do you need an expert to review your credit and your documents? For all the reasons I just labeled. I am a credit expert for sure. I've been doing this for 27 years. I can look at this stuff in my sleep and know, what suggestions I can give people to get them in a house, because that's ultimately what my goal is to do, is to get you in a house. Do you need perfect credit to get a good interest rate? No, you don't. We understand first-time home buyers are first-time home buyers. They don't know necessarily how to take care of credit, what to do with the mortgage. Maybe they messed up when they were in college. Maybe they had a medical bill. They thought they had insurance and now it's a collection account. So now the score is low. There's a lot of reasons for having a less than perfect credit score, and we're okay with a lot of those things. If we think that you're going to pay, then we'll help you get a mortgage. Okay, so there's two words that you might hear out there. One of them is pre-qualification and one of them is pre-approval. Pre-qualification is basically saying that we check your credit. We check your credit on both options. But pre-qualification says if your documents match what you said, then sure, you're qualified. That means what to a seller, Linda? It means nothing. Sellers want to know, did you see the bank statements? Did you see the tax returns? Did you see the W-2s? And so that's what comes with a pre-approval. So pre-approval takes a little bit longer. You do have to submit your documents to me. That would be your tax returns, your W-2s, your pay stubs. But then I am basically pre-underwriting your file to know that you will be approved when you find a house and that you will get to closing. So which one looks better to the seller? Obviously a pre-approval. They want to know that that buyer is pre-approved. And on some, some houses, they're getting 10, 15, 20 or more offers. They are sifting through to find the best buyer. And they are skipping right past the guys that are not pre-approved. So that's what we would help you do. Okay, so just a little bit of basic information about some of the loan types that we handle. I call them the first three, the three big G's, which are the three big government loans that you may hear about often. One would be FHA, that's the Federal Housing Administration, or HUD, Housing of Urban Development. That is a 3.5% down mortgage. There's a VA mortgage, which is an awesome loan for our veterans. And that is no money down, 100% financing. And then there's rural housing, or often called USDA financing, which is also no money down, 100% financing. With these programs, you can be a first or second time home buyer. There's little or no money down, and the seller can pay some closing costs if they are willing to. Now, there's also another program that I have called PHFA. That's the Pennsylvania Housing Finance Agency. And, I would explain this as you would get your FHA loan with a side of meatballs, for example. You would get your FHA loan, and then we would have a PHFA component on top of it. And I will explain some of those other programs that PHFA has, but not limited to down payment assistance and closing cost assistance, home improvements. If you are disabled and you need, say, a chairlift in your new house, you can get some money for that. These programs do have income restrictions. Most of them have income restrictions or income limits, that we have to check. The next kind of big group of loans would be conventional loans. That's where that 760 score.
Okay.
Where if you have a 760 score, you are getting the best interest rate. 760 score, 20% down, that guy is going to get the best interest rate. Most people don't have a 760 score with 20% down. And that's where I come in for the first time home buyers on all my other programs. So we would discuss that, things that apply to you. Okay, so these are two awesome programs. Super awesome, and you can actually use them together. So every year there's a $5,000 grant that comes out, and it comes out around, the first few weeks of the new year, which would be not that far from now, maybe 3 months from now. The $5,000 grants, you do not have to pay this money back if you live in the house for 5 years. So basically it's free money. There are income restrictions to this program due to the amount of people that are going to be in the house. So, one person, 2 people, 5 people. So, how many kids do you have? Is grandma going to live with you? Whatever. We look at all that for the household income limit. This $5,000 grant is first come, first serve. So I do put people on the wait list starting right about now, so that once the program opens, if it's beginning of February, end of February, that I quick order all the people that have been on the wait list, because they're, like I said, there is first come, first serve, and it will go away. It stopped this year right around June. So it opened up in February, it ended in June. It went pretty fast. So if you are interested in that, you want to get on the wait list, subscribe to Linda's channel here, and she can get you on the wait list with me for the $5,000 grant. I also have this is one of the PHFA loans. It's a 5% down payment assistance. So you do not have to pay this money back if you live in the house for 10 years. Again, it's free money. If you bought a house for $200,000 and you got the $5,000 grant, you would also get a $10,000 down payment assistance from PHFA, which gives you $15,000 for your down payment. That's
crazy.
Yeah, it's awesome. And it only, if saving money is your problem, like I said in the beginning, what's your problem? Why haven't you bought a house already? If saving money is the issue because you're paying rent, you've got kids, it's hard to save money. Things are more expensive right now. Groceries are more expensive. Gas is more expensive. This down payment assistance money really does help. With these two programs,
Wow.
$5,000 grant, you only need to have a 620 credit score. There's no other requirement, and you have to be under the income limit. With the 5% down payment assistance money, you do need to have a 660 score. So if you think your score is less than 660, then you would want to get in touch with us as soon as possible so we can help you raise that score to be able to use the $5,000 grant and the 5% assistance come early next year.
Perfect. That's a great plan, Krista. I love that.
Always trying to help. Okay, so just a word of caution, if you are in the market to buy a house, in the next few months, even up to a year, don't compromise your credit by buying a car. When you're in the process and you have a house under contract, don't buy your appliances. Don't go to the Home Depot card and buy your washer and dryer. Don't consolidate balances on credit cards or transfer balances. You don't want to do anything to mess up your credit at all. If I tell you to open a credit card before we're in the process, that does not count to what I'm saying here. But don't co-sign for your cousin Vinny who needs to buy a car and can't get approved. That's the worst thing you can do. If you co-sign for somebody, that whole debt gets counted against you. And if that person pays that bill late, it's now your problem. So, mortgage companies, we will run your credit the day before closing. So if there's anything that, I had a client who had to get engaged in the middle of buying a house, and he called me on a Friday night and he said, I need to go in and buy this engagement ring because it's on sale and I have to buy it tonight. And I said to him, don't do it. Don't do it. Can't do it. If you do it, it's either the ring or the house. What do you want to do? So I'm glad that he called, because if he just did it without calling me, then he wouldn't have had his house. So that's the thing. Call me first if you ever have a question. Deposits are super important. We look at all your bank statements for the last 3 months. We're looking for cash deposits. We're looking for deposits that can't be proven otherwise where the money came from. You can't use unsecured funds to purchase a house. You can't use money that you can't prove where it came from. So if you've been saving, taking $50 out of your paycheck every week and putting it under your mattress, and then it comes time to buy a house and you want to deposit $5,000, I'm going to say, where did that money come from? And if it came from your mattress, you can't use it. We won't let you use it. So you might be short money. So again, that's another thing to talk to me about, is if you have any questions about where your money is coming from to buy a house, I can help you resolve that. Communication is key. Call and talk to me about the situation before it gets complicated. You don't want it to get complicated. We want to have an easy breezy house purchase. So what if you don't qualify now, or you just need to save more money? I can help. There's incentives for people to buy houses. I can give you information on budgeting, grants, down payment, closing cost assistance. I can help you with some hopefully fairly simple ways to clean up your credit or raise your score. Maybe you just need to get that last 5 points in order to get to 660. I can help you do all that. I can show you the cost and payments for houses so you don't have to guess. Whenever I pre-approve somebody, I give them a cost breakdown for their scenario that shows them what the monthly payment will be, how much cash they need out of pocket, and people seem to like that. So I'm looking for clients for life. I don't give up if you don't give up. I can't work harder than you to buy a house. So if you want to do it, we are definitely the team to help you do it. And this saying that I really like, when you feel like quitting, think about why you started. So maybe you've been trying to buy a house for a long time and it hasn't worked out. Maybe you just haven't met the right people to help you achieve your goal of home ownership. So a couple things. I'm available nights and weekends. I'm not sitting waiting for your call at 7:00 on Sunday night. However, if you need me and you put an offer in or something, I am available. People get ready to buy and help raise their credit scores. I don't give up on people if they don't give up on their dream to buy a house. I'm available after closing with refinancing, or if you want to buy again. And when we ask our clients what was important to you during this process, rate was only somewhat important. rates go up and rates go down, and that's just how it is in this market. In 27 years that I've been doing this job, I mean, rates have been anywhere from 10% down to 2%. So people have to buy houses. People will continue to buy houses. The rates are not something that you need to be too worried about, because it is what it is with that. All right, so this is just a real quick note into another program that I have. Let's say you find a house that needs a little bit of work. There is another loan. It's an FHA loan. It's called a 203K. And I will lend you the money to buy the house minus your 3.5% deposit, but then also give you the money to fix up the home. And these are some of the things you can do. You can do add a room, do kitchen and bath, new siding, decks, patios, new appliances. So we can finance that stuff into the loan so that you can renovate. Here's a couple examples of before and after. This is a bathroom before, when they wanted to buy the house. And normally we would not let you purchase a house in this condition, but on this kind of loan, we can let you purchase something that needs work. Here's another before and after of a bathroom. This is before and after of some stairs. It really looks nice. Another bathroom. And then this is some of my happy people. So, every single one of these people were my clients who bought their house. I like to have them hold up their key and take a picture. I mean, you can see how happy some of these people are. Buying a house is super important. It's the American dream. And, we want to help you get your keys to your new beginnings, basically. So what should you do next? I mean, basically, hashtag call Krista, hashtag I name myself Mortgage Boss Babe. And here's my portal. So when you are ready, you can visit www.mortgagewithkrista.com. That takes you right to my portal where you can enter in your information and you can upload your documents. And then hopefully you will get a pre-approval. And if you don't, you will get a very detailed list of what exactly you need to do to get yourself ready to buy a house. It may not be now, it might be 3 months, it might be 6 months from now. But when you go to visit this portal, you're going to get one thing or another. You're going to get a pre-approval or you're going to get instructions. I don't leave anybody high and dry. I try to help everybody. And, I love my job and I love helping people buy houses. So that's my spiel.
Well, thank you, Krista. Wow, that was awesome. I mean, and I have to tell everybody, Krista is one of the things we love about Krista and Huntington Valley Bank is the personalized service. It's one thing to apply to a national lender and you place your call and some mortgage person gets back to you a week later. And then they say they have to take your application and that takes, it'll take a couple of weeks to get it approved or not. And with Krista, she's available by text or by phone. And within 24 to 48 hours, you know where you stand, one way or the other. And if you're not ready yet, if the numbers don't work, Krista can show you exactly how to do it. What do you need to do to raise that credit score or pay something off? So we have a very high regard for Krista. She knows what she's doing after all these years. I don't need to worry when I send my clients to her because and she's no nonsense too, by the way. If you don't qualify and you're not going to qualify, she's not going to drag you along and have you pay an application fee and provide all this documentation and then say no. She will let you know where you stand right from the get-go.
The key to everything, like I said, is me reviewing your documents. So putting in your information without your documents doesn't really help because I need to look at that stuff and I need to see your income just so I can give you an accurate guess on your pre-approval and how much you would qualify for. So you are able to do that in the portal. I'm certainly happy to talk to anyone who wants to call or text me as well.
And you cover all of Pennsylvania. So if someone is in Allentown, you could do their mortgage as well as somebody in Doylestown or Philadelphia.
I handle the whole state and several others as well. if you.
Right. Okay. Okay. So if you're thinking about buying or selling a home in Philadelphia County, Bucks, Montgomery, or anywhere in the 5-county area, we're here to help you. We can cover the mortgage side of things, the real estate side of things. And if you're not ready yet, we can help you get ready so that you're, and by the way, this bond program that Krista has, you need to sign up for that. Like when the time comes, reach out to her now if you want, just to have her, put you on the list, because that is free money. And if you're looking to buy your first home, you're going to get a low interest rate right now. Hopefully they will stay low for at least another year. And this will just add to the money that you have to put down. We're very excited about the market, the spring market coming up this year. So we can only help you if you let us know that you need your help. You're going to need to reach out to us in any of the 5-county area. So give us a call, send us an email, shoot us a text, or hop on our calendar for a Zoom call. We would love to help you make a smooth move into the area. Thanks for watching, and we'll see you next video.